Hello traders, this is Rich from Tradesight. This is the market preview for the coming session. This is going to be for Tuesday, January 14th, 2014. We had a very abrupt and very sharp distribution day across the board. We saw the ES lower by 33 handles on the day. NASDAQ side was lower by 52. We also had internals that really pretty much were in sync with the downside that we saw today, with pretty good loss on the advanced decline side and a very big pop in the VIX. The VIX actually traded below 12 intraday, but closed at 1328, up $1.14 on the day. Let's move on and take a look at the individual leading futures contracts. Let's just look at pure price first. All right, so taking a look at the ES chart first. This is just pure price here and volume. We had this rising wedge that we broke out of to the upside. We recorded this high water mark right at the end of 2013, and so far for 2014 in January so far, we've essentially been slugging sideways in a fairly close trading range. But today we definitely saw a reshuffling of the deck. We had a range expansion candle to the downside that settled below the recent lows that we've been trading in. So the trading range was breached on a closing basis. We're obviously well above the key breakout level, where there's going to be some major support, but that's much lower. Here's a look at the NASDAQ side. The NASDAQ side of the market has a somewhat similar design, but the ascent after the breakout out of the channel was a little bit more pronounced here on the NASDAQ side. We did close at a new low on the move, but we did not close below the previous low of this little trailing band. So we're definitely seeing a little difference here between the NASDAQ side and the broad market side. The other key difference, though, is that the angle of ascent from the wedge that we broke out of was a little bit steeper on the NASDAQ side. So we're actually going to potentially come in and interact with that quite a bit sooner. Here's a good contrast. Here are the YM futures that represent the Dow Jones Industrials. You can see that the angle of ascent here from the trading range was much more lateral than the NASDAQ side. Same potential, same essential setup as the ES side, with the high water mark right at the end of last year, and then we've broken down below the trading range that we've been in year to date. So we've actually made a new low on the year here. With today's settlement. Also note the distance that we got below this little trading range that we have been in for many days. So this is definitely a key breakdown here in the YM futures. All right, so since we're talking about the YM futures, let's take a look at the YM futures with the levels and also the seeker tool applied to it. First thing I want to talk about, and this is something that we're going to circle back with the ES futures and also the NQ futures, is the 9-13-9 pattern that is in place from the seeker tool. If I can turn your attention back here to October, we started this move to the upside here. Here's 9 bars to the upside in the startup phase of the seeker. Then we had a subsequent startup phase here that propelled us to new highs. Off of this count to the upside here, we started to get into the exhaustion phase of the seeker, and we got an exhaustion warning here on the 24th of December. And while the 24th of December isn't a great time of year to look for an exhaustion, we also had a new startup phase in progress here on the seeker, and this 9 bars up here in the setup phase that's most recent here on the chart was the high water mark of the year. That was on, surprise, December 31st, 2013. So since then we've been essentially trading sideways here, just hovering above the 10-period moving average, which defines the short-term trend. But today we broke decisively below that. We actually even closed a little bit below that key 8-ace level at 16,250. So levels to watch to the upside are going to be at the top of the trading range, to the upside about 16,500. To the downside, we're going to have some support here at the 7-ace level, which is also coincident with the previous high before we pivoted and made this run to the upside about 16,090. And then below that, the 50 DMA is going to come into play. Moving on to the NASDAQ side, similar design here. We've got a 913.9 in place as well. Here's 9 bars up to the upside. Here's your 1 through 13 exhaustion warning. The exhaustion warning did hold the advance in check for a good number of weeks until we finally produced that high close on the last day of the 2013 trading year. We then had this lateral trading range, which we broke down below today on a closing basis. So pretty powerful chart in place here. Key resistance is going to be 35.94 to the downside. We've actually settled below the low close, but this intraday low here is going to be important, at least for tomorrow's session, which we may gain a little bit. But when we release below that, then we're going to put the 50 DMA in play that comes at about 34.67, 34.68, and then below that there's going to be a real important level at the 4/8 level. Now here's the ES side, which actually looks quite a bit like the NASDAQ side. We had the 10 EMA breach today. We still have that 9-13-9 pattern in place, which is definitely bearish and really kind of culminates this extended run to the upside. 50 DMA is going to be next support if we lose this 6/8 level here. So the next real level to watch is going to be 1797. Keep in mind this 1812.50 is a pretty big area, not only because it's the 6/8 level, but it was also the pivot high here on the previous move to the upside. Now I want to take a look at the MACD. MACD was definitely losing momentum here on this last push to the upside. You can see that this MACD reading here is lower than we were at the real heart of the move to the upside. And in fact, the MACD now has registered a negative signal to the downside and very well could be poised to drop down towards that 0 level. Now as far as the intermarkets go, we're definitely starting to see some weakness here developing. The S&P TLT cross has been leaking for some time now. It actually broke down late last week and is following through to the downside. So this break to the downside should not be any real surprise to the people who have been on top of this key ratio. This key ratio, which is kind of a risk-on, risk-off metric, has been leaking to the downside and is starting to show acceleration to the downside. Let me just grab this line here. I'm just going to move this down and just kind of reconstruct this this trend here. We've got a little bit of a breach right here. You can see this little micro trend that we've been in. You can see above here has been a little bit overly bullish. Below here has been a little bit too bearish in the overall market, but we're starting to turn down with some momentum off of range high, which could be a very important development technically. Now here's a look at the cumulative advanced decline line. The upper chart is the New York side. The New York side's been fairly consistently positive. We haven't really had any strong new highs, but we have had an upward bias. So that's really not a cause for concern right now. The thing that we need to be aware of, though, is that the NASDAQ side really didn't have much of a push to the upside while the market was really making some pretty significant new highs in December. We are seeing some downside activity, and we started to see some downward activity that's developing into a bias here to the downside in the NASDAQ side of the cumulative advanced decline line. So we're starting to pick up momentum to the downside here. If we start to take out this lower trend line here, we're going to definitely be on guard for probably a fairly substantial move to the downside. But we're going to play this one day at a time. We're going to make sure that we keep coming in and checking this every night for you. So we definitely have some downside momentum developing in NASDAQ. And keep in mind that the NASDAQ side usually leads the broad market side. So if we continue to see downside in the NASDAQ, we're eventually going to see it in the New York side as well. All right, finally, let's end with the gold futures. We saw a secret exhaustion warning here back in the end of 2013 in December. We had a 13 exhaustion here. Let me just reframe this. Here's your exhaustion warning. We got our candle here right at the dead low, which was spot on. We've since then turned short-term positive by crossing, closing, and following through above the 10 EMA. That's the blue line. So we're definitely seeing some buying interest, and now we're actually in the area of gaming the 50 DMA. So if we're going to see kind of a shift and a risk off in broad market equities, we're probably going to wind up seeing some risk on and some capital flowing into the gold shares. So keep an eye on the gold here itself. We're kind of gaming this 50 DMA. The 50 DMA does get gamed, but it's not nearly as strong as the gamesmanship that goes on around the 200. So within the next 48 hours, we could definitely see some pretty significant action in gold that will tell us whether we're going to break out and take out and move up and potentially put in play the 200 DMA and maybe even the static trend line here off of the most recent count to the downside here in the startup phase. So definitely keep an eye on gold. Make sure you have some of the gold miners on your long watch list for anything that looks potentially positive on a technical basis. And if you do see breakouts in the or reversals or continuations in those gold mining shares, definitely don't pass on those. All right, folks, as always, thanks for listening. This has been Rich for Tradesight.